Hey traders, I want to make just a really quick note here. It is Friday, February the 11th. Market has just closed, and you guys know what the market did today. We had the rumors coming in that Russia was going to invade the Ukraine. The market took a big dump today. Let's take a look real quickly at the 5-minute charts. And I wanted to make this video real quickly just to share with you our results today. There's the dump right there. And I just wanted to talk about our results with our 0DTE trade today, where we brought in about $1,000 profit on about $5,100 of total capital invested. We actually did better today than we usually do. Really about the best you're going to do on a well-constructed 0DTE trade is about 10% on the day. You put up 10 grand, you bring in $1,000, right? So we started the day with a $2,000 NDX trade. We went with the NDX today. We thought there was better premium, better price action in that, and it absolutely blew through that trade right here. So let's talk about it. Let's get into it. Talk about how we turned that losing trade into a very, very nice winner. Okay, so let's get into our trades here today on our 0DTE. We did choose the NDX to trade, and I want to walk you through how there's a huge difference between offensive adjustments and defensive adjustments. And I always use the analogy, my son is 18 years old. He's a third-degree black belt. He's running a black belt, running a karate studio right now, and in his dojo they talk about all the time, as you guys have heard many times, the metaphor that you can use your opponent's strengths against them, right? If you have an opponent that is stronger than you and bigger than you, you can use that against them if you understand how to use that. And that's a little bit how we view adjusting in the markets. We define adjustments in trades as defensive and offensive adjustments. And for the most part, a lot of our adjustments are just fine-tuning trades, and it's defensive in nature. You're rolling out on your strike prices. You're maybe gaining a little bit of credit or a little bit of time to help the trade work out, but it's not a big deal. But when you have the market move as much as it did here today with this big massive sell-off here, you need to move to offensive. And so we talked about in the live trading room here this morning before the markets even opened up how we were going to probably focus more on offensive adjustments today if that was necessary. It's exactly what we did. So I want to go through our trades to start the day. We started the day right here. I'm on Mountain Time, so the market opens up for me at 7:30. So we were barely into the market open here, and we were able to catch this really nice correction right here. So we, one of the challenges with the NDX and the Russell, maybe versus the SPX, is that it's hard to get really solid fills sometimes. Bid-ask spreads are a little bit wider, but we got a really good solid fill here. We sold the call leg right here. Just one contract, $20 spread, so it was a $2,000 trade, and I brought in $165, okay? So we sold the call spread right there. We couldn't have timed that any better. That was absolutely just timed to perfection. If you can do that every single time you trade, you'll make millions. We had, I don't know anybody that can, but we did it at least this time, and it worked out quite well. So we had this great trade in there. You can see that that's right up here, this blue line. That's where the strike price was of our short leg. So it was a very, very high probability trade, and we timed it just perfectly. And that trade in and of itself, bringing in $165 on $2,000 of capital is about an 8.2% or so potential rate of return, which one of the things we love about the volatility that we are getting in the marketplace right now is that you don't have to do both sides of the trade. You don't have to do an iron condor. You can do just a put spread or a call spread. Keep the risk open on one side of the trade, and you're going to still get compensated very nicely if you do end up making money, if the trade ends up working. But we got into the call side right here, sold the call spread way up here, pretty safe. That thing started cash flowing immediately as soon as we put it on. So we were looking for opportunities to put a put leg on. We wanted to enhance the trade. I guess 8% is not enough profit for the day. We wanted to do better than that. I felt like we were really patient. If you look at this price action through the day, it's pretty jagged, it's pretty volatile, it's pretty unpredictable, really. There was a lot of ebbs and flows, but we did continue to have lower highs and lower lows, and we got down to this lower low down here, and I was like, okay, if we can get back up above this previous high right here, we'll come in and we'll sell the puts. And that's what we did right here. You can see the next trade that we did was right here at 10:13 a.m. and we just put in the companion put leg to the call leg. And that's right, and we brought in $1.75 there, so $175 on the sale of the put leg right here. This is where the put leg was, and you say, well, you know, that's a little tighter, it's a little closer to, the strike price is a little closer to our underlying price versus our call price. But you have to remember, you know, we're looking at a market here. The NASDAQ went from 14,750 down to what, almost 14,550. That's almost a 200-point move in the NASDAQ. So we were already down 200 points when we put that on. Surely we would be safe down here, right? Probabilities on the trade, the POP, everything looked really good, and it was good. It was actually cash flowing quite nice. Even though it kept dropping, we were in a nice cash flow position. Those two legs together, you know, about 8.6% potential return on the put leg, 8.2% on the call leg. It was about a 17% ROI potential on our 0 DTE for today. That's crazy numbers. Like we do everything that we can, and generally speaking, it's very difficult to get above a 10% potential ROI on the day. That would be a picture perfect 0 DTE. That would be putting on both the call and the put side, the full iron condor, right up front at the start of the day, walking it through the whole entire trading day, not needing to make any adjustments, riding it all the way into expiration and letting it expire fully totally worthless. That's very hard to do. So 17% ROI, we were absolutely thrilled with it. And then of course we get the news. Whether at this point, and again, today is still Friday, just right after the market closed, so who knows whether it's valid or not, but news that Russia was in fact going to look to invade the Ukraine. And the market just starts dumping. So it moved very fast. It looks like you got a lot of, you know, these are 2-minute bars right here. So it looks like you got a lot of time there. It moved very fast. And we were able to exit that trade just right here. You see the exit right here. Just right at 11:35 a.m. my time, just right before we got down to our short strike price, and we exited the trade at a debit of 680. Now I'm not a math major. I didn't go to math college, but if you add up these two numbers and you subtract this number from that, that ends up in not a net credit but a net debit, right? So we were upside down. I think by the tune of about like $320 or so on our 0 DTE for the day. So that really was step one. Step one is to protect the trade, right? To stem the losses, stop the losses, stop the bleeding. So that was step one, was we went ahead and we closed the put leg. Now we could have done one of our more defensive adjustments, which is just pull the short leg and leave the long leg. And actually for today, the price action was good enough that that might have actually worked as well. But we did something that was a little bit more, I think, clean in its approach and actually yielded a better profit for us. So here's our offensive move that we took. We went into the NQs. We went into the NASDAQ futures contract, which is about $5,100. So I did ramp up my investment from $2,000 to $5,100. So you have to keep that in mind, that we did increase our buying power by more than double in the trade, but still we're talking about a $5,000 trade here, intraday margin, and you can see the price action right here. I got in at 11:36 and we exited at 11:43. We shorted the contract, so you can see we went short initially and then we went long. What was the result of that? Well, you can see right there, we basically got in our short position on the NASDAQ right as quickly as we could after we exited our broken leg put leg of our NDX trade, and then we exited right out of that short position very quickly right thereafter. You can see we were only in it for a little bit. Got in at 11:36 a.m., got out at 11:43 a.m. Just a few minutes in the trade, just a few ticks in that trade. That tick right there was worth $885 profit. So $885 profit on that trade, plus a net profit of $160 on a SPX trade, which I'm going to show you in a minute, puts us over $1,000 profit for the day. So what was so first of all, nice profit overall right there for the NDX trade. We caught another go at the 0DTE today with the SPX. So with just about 1 hour to go, we call it the power hour, 1 hour left to go in our trading, we noticed that while the SPX here had fallen pretty much just lockstep with the NASDAQ, it had actually started to consolidate down here. Again, still in a downtrend, but it had consolidated quite nicely. And with the news and everything, I actually expected that we were going to be down quite a bit more. So again, right there, 12:58 p.m., that would be 1 hour and 2 minutes before the close of the day. We sold a put spread, 4-contract put spread at 40 cents on the SPX, down at 43.45. 43.45 was the short leg. That was way, well, it's down below where the chart goes. It was way down. It's still below where the chart goes. 43.45, right in that area, right in there. And again, keep in mind that at this point we were already down about 80 points on the SPX. You get a 100-point move in the SPX, that's a big day. And we were already down 85. We felt very comfortable with that. That trade brought us in another $160. So again, $885 in on our adjusted NDX trade, $160 of profit in on the SPX trade. That's $1,045 gross. We probably got about $50 worth of fees and commissions in there. So let's call it $1,000 profit on the day with a $5,100 capital commitment. You know what's interesting? It comes right back in at about 17% ROI for the day. It's obviously a whole lot more money than we had anticipated. We set up our original NDX 0DTE with a 17% ROI potential. It was going to be $340. In this case, we made $1,000 profit, still 17%, but we had to move our buying power up from 2,000 to 5,100. But it's a crazy, crazy day. And anytime you have price action like this, and you can have a trade that blows up on you, you threaten a leg, and you can not only turn that losing trade into a winning trade, but you can turn the profit on that trade into a bigger dollar profit than you would have otherwise made had you not had to adjust it. And that's a good day. So anyway, if you guys ever want to come check out our live trading room, I'll drop a link in the description box below. But I appreciate you guys. Let me know in the comments if you have any questions on how we trade the 0DT. I know it is a little different than everybody else. I'll also drop a link in the description on the link to our video on adjusting. We do tend to adjust a lot more than what a lot of people do with 0DTs. Rather than a very static trade, we try to make them as dynamic as possible. Thanks for checking it out, guys. Have a great weekend. We'll talk to you soon.